Welcome back. In our earlier video, we had discussed about what is accounting and types of financial statements. We had also created a video describing various components of a cash flow statement. In case you haven't seen those videos yet, please go to the link provided in the description box. But before doing that, please see this video. If you like the content, please click on the like button and also share it with your friends and colleagues. Also, if you haven't subscribed to our channel yet, please don't forget to subscribe it. In this video, we will discuss how to prepare a cash flow statement. There are three types of financial statements: income statement, balance sheet, and cash flow statement. In the income statement, we have the revenues, expenses, and net income generated by a business during a particular time period. A balance sheet shows the financial position of an entity as at a particular date. A cash flow statement shows how efficiently a company has utilized its cash, how much of it was generated from the business operations, and how efficiently it was utilized. All these three financial statements, the income statement, and balance sheet, and cash flow statement, are linked to each other. The income statement is linked both to the balance sheet and cash flow statement. Similarly, the balance sheet is also linked to the income statement and cash flow statement. We have the income statement and balance sheet of ABC Limited for the year 2019 and 2018. From these financial statements, we are asked to prepare the cash flow statement of the company. Before preparing this cash flow statement, let's understand the components of the cash flow statement. A cash flow statement has three parts: cash flow from operating activities, cash flow from investing activities, and cash flows from financing activities. Cash flow from operating activity is the most important component of the cash flow statement. It shows how much of the cash flows company was able to generate from its business operations. This cash flow from operating activity is linked both to the income statement and the balance sheet. To calculate the cash flow from operating activities, we start with the reported net income of the company. Then we add the non-cash expenses like depreciation and amortization, because there is no actual cash outflow related to these expenses. Then we deduct the interest received or add the interest paid, because these are financing activities. And then at the last, we add or deduct the changes in working capital. Any increase in working capital is a cash outflow for the business, and any decrease in working capital is a cash inflow for the business. In this Excel, we have the income statement and balance sheet of ABC Limited. So we will start with the cash flow from operating activities. To calculate the cash flow from operating activities, we will start with the net profit, which is 823. Then we will add the non-cash expenses. So the non-cash expenses in this income statement is just the depreciation. So we will add the depreciation with a negative sign. So that becomes positive 200. Then we will add the interest paid by the company. So with a minus sign, we will add the interest paid. So the cash flow from operating activities before changes in working capital is 1048. We will add or deduct the changes in the working capital. Working capital is current assets minus current liabilities. So we take the current assets excluding cash and current liabilities excluding any debt to calculate the working capital. In this balance sheet, we have inventory and accounts receivable, which will form part of the working capital. And on the liability side, we have the accounts payable and accrued expenses. As discussed earlier, any increase in working capital is a cash outflow for the business. So we see that the inventory of ABC Limited has increased from 493 to 800 and accounts receivable has increased from 400 to 500. So both these components will lead to a cash outflow for the business. So we will deduct the inventory increase. So inventory increase is basically 493 minus 800. Similarly, accounts receivable increase is 400 minus 500, negative 100. Now we will adjust for the changes in the current liabilities. So in current liabilities, we have accounts payable, which changes from 100 to 200, and we have accrued expenses, which changes from 50 to 90. Increase in accounts payable and accrued expenses is a cash inflow for the company. So accounts payable increases from 100 to 200. So we have negative 100, so we'll put a negative sign to make it positive. And similarly, the accrued expenses have also increased, so we will put a negative sign and then 50 minus 90, so we get a positive 40. So when we do all these adjustments, we get the cash flows from operating activities, which is 781 for ABC Limited. Now, let's move to cash flow from investing activities. Cash flow from investing activities shows how much cash a company has invested for future growth. This takes into account the capex, cash paid for acquisitions, investment in any securities. So all these three items are negative. So this is a cash outflow for the company. And then in case there is any sale of asset or business, that is a cash inflow. So it will come as positive in cash flow from investing activities. Cash flow from investing activities are more linked to the balance sheet of the company. In our example, to calculate the investments, we look at the gross property, plant and equipment. The gross property, plant and equipment has increased from 500 to 1000. It is a cash outflow for the company of $500. So it's basically change in gross property, plant and equipment. And we also have some investments in the balance sheet, which increases from 100 to 200. So it is again a cash outflow of $100. So we will link it to the investments. That's it. We don't have any sale of assets in the balance sheet. Neither we can see any sale of investment or any extraordinary gain in the income statement. So that's it for the cash flow from investing activities, which is negative 600 for the company. Now moving to the cash flow from financing activities. Cash flow from financing activities summarizes transactions that involve raising and repayment of capital. The repayment or raising of capital can be by issuance of shares or by loans from banks. These activities also include interest payment and dividend payment to shareholders or share buybacks. Cash flow from financing activities basically includes the capital raised and the payment made to the financiers of the business. In our example, we see that there is an interest payment of $25. Then We have an increase in long-term debt of 300. So opening long-term debt was 200, closing is 500. So there is an increase in long-term debt of 300. There is no change in the equity financing. So for cash flow from financing activities, we have the interest paid, which is negative 25. So we had added this to the cash flow from operating activities, but this is payment to the debt financiers. So it will be deducted from cash flow from financing activities. And then we have the increase in long-term debt. Increase in long-term debt is a cash inflow for the company. So it's the change in long-term debt leading to the cash inflow. So we have 200 minus 500, which is positive 300. So we have a cash flow from financing activity of $275. If we add the cash flow from operating activities, investing activities, and financing activities, we get a net cash inflow of $456 in the business. Now, if we add the opening balance, we should get the closing balance, which should be equal to the cash in the balance sheet. So the opening cash balance is $55. So we link it to the $55, and now we have the closing cash balance of $511. This closing cash balance matches with the balance in the balance sheet. So this shows that the cash flow statement has been prepared correctly. This is how we can easily prepare a cash flow statement if we have the income statement and balance sheet. You can use this method for financial modeling also. If you want to know more about financials analyst skills, how to prepare financial statements, financial accounting, ratio analysis, business valuation, please don't forget to visit our website www.skillfinlearning.com. Thank you.